What's going on, guys? Welcome back to another video, and in today's video we'll be going over the exact strategy that made me over 30,000 in the month of July. We'll start from the very basics first before moving on to the more advanced part of the strategy. So right off the bat, this isn't some random entries type of strategy. This edge is reading the market story first before moving on to executing the exact setup. So this model here has 5 different parts to it. We start off from the location first of where price is at currently. Then we move on to identify a manipulation that happens. After that, we wait for confirmation before entering for the expansion. The market moves in 3 different phases, and it's called AMD, which stands for accumulation, manipulation, then distribution. So accumulation is when price stays in a tight range and builds liquidity on both sides, both buy side and sell side. Then we move on to the manipulation, where price sweeps either side, either the buy side or the sell side, before reversing and going the opposite direction. And finally, distribution. That's where the real move happens. The real move happens after the sweep of either the buy side or the sell side of the accumulation phase. An easy sequence to always remember: range first, sweep second, expansion last. So let's start off with a bullish example first. Price forms a range, you have the high, you have the low, then sweep sell side below the accumulation phase. Once sell side is swept, that's a confirmation of the manipulation. Then the market reclaims the range, then expands higher towards the real draw. The sweep lower is a trap. The move up is a real distribution. Now let's move on to the bearish example. Price forms a range, sweeps out buy side, stops out anyone that was entering shorts and had their stops above the accumulated liquidity up here, then distributes lower. The sweep higher is the manipulation and sweep of liquidity. The move lower is a real move, the distribution. Once you understand AMD and how the power of 3, accumulation, manipulation, then distribution, work, the rest of this will make perfect sense for you. So let's move on to the next section: how to find your narrative, how to find your bias. Before any entry, you need to ask yourself, where is price at right now? Is it in premium? Is it in discount? Is it inside of a higher time frame gap? Is it near session liquidity such as London high, low, Asia, PM session highs and lows, New York highs and lows? Then you also need to ask yourself, is it at the edge of a range or is it in the middle? So in this case right here, we have this range and price is near the low of it. Then you ask, where did price come from? In this case, price is coming from this buy side up here. Price sweeps buy side, take out anyone that was short, then moves lower. After the move lower, price retraces back into a gap, swings down, stays within this gap here, currently in a range. So right now you have your buy side and you have your sell side down here. We wait for price to sweep out either the high of the range or the low of the range before deciding on the overall direction. So we wait for price just swept out buy side, stopped out anyone that was long, then reverses in the opposite direction, as you can see here. So in this case, we have the accumulation, manipulation lower, and finally distribution. Now let's move on to the exact entry model and strategy that made me over 30,000 in the month of July. At 10 a.m. Eastern Standard Time, wait for a price to open and manipulate into a 15-minute gap. Then you wait for a liquidity sweep inside the 15-minute gap before a displacement away, leaving behind a change in state of delivery, then a retracement back into a IFVG. Once you get this retracement, you enter, you place your stop loss at the low or high of the 4-hour candle, and you target a minimum 2 to 1. These steps should happen in order all the time. For bullish and bearish example, it's the same exact thing, just flip this. Step number 1, PO3 into a 15-minute gap. At 10 a.m. Eastern Standard Time, a new 4-hour candle opens. The candle will usually create a wick before the real move happens. What I'm looking for exactly is for the wick to manipulate into a 15-minute gap. Once we get that manipulation, I want price to deliver into that pre-marked 15-minute gap. Then once we get that tap into the 15-minute gap, that doesn't automatically grant you an entry long or short. Instead, you wait for step 2. Once we get the step right here, we wait for price to sweep liquidity inside or around the 15-minute FVG. The sweep creates a manipulation. Without the sweep, the setup is incomplete and it's probably low probability. Again, an FVG touch alone is not enough. After the sweep, look for a change in state of delivery. A CISD basically shows you if the delivery has shifted from bearish to bullish. I mark the open of the last series of unclosed opposing candles. In this case, it was bearish candles. I mark the high of them. I want a decisive body close through this level to confirm the change in state of delivery. I also want a clear displacement and separation from the sell side down here in the 15-minute gap. Then we have step 4, which is the inversion gap. After the change in state of delivery, a displacement should create or invert a 1-minute gap. In this case, we have this lower time frame 1-minute IFVG. Then after that, the IFVG gives us the entry. The IFVG must form after the CISD confirmation. If it forms before the sweep or CISD, it's not the setup. And finally, we have the last step, the distribution phase. Now, distribution is the expansion towards the real target. This is the move I try to catch every single morning at 10 a.m. The target should be opposing or external range liquidity, meaning session highs and lows, previous days highs and weeks highs and lows, or even months. Now, if price is already expanding, your opportunity is gone and you should just wait for the next setup. Now, before moving on to the real chart example, I want to make something very clear. There is a difference between change in state of delivery and an inversion gap. CISD answer us, has delivery actually shifted, went from being bearish to bullish or bullish to bearish. Now IFVG answers, where is the clean execution area? Meaning, is it in discount relative to this range here? Is it in premium to be buying in discount? If you're selling, you need to sell in CISD without IFVG does not confirm nothing. You cannot execute a trade without an IFVG. Without CISD, imbalance without proof, meaning the setup is not there, price is just manipulating both sides. So let's move on to a real life chart example. So we'll go over a bearish example first, then we'll move on to a bullish one before wrapping up this entire video. So step 1, power of 3 into a 15-minute gap. So before the 10 a.m. candle opens, we go on the 15-minute chart and we mark out a 15-minute gap. In this case, we have this gap right here. Then we drop down to the 1-minute chart. Then we wait for a price to tap into the gap. Then we look for a sweep of liquidity right here. So now we have a tap into the gap, a sweep of buy side. Then we wait for a change in state of delivery, which forms right here, the last series of up close candles. Then we wait for a inversion gap, which we have right here. Once we get the tap into the inversion gap and change in state of delivery, you enter your position short. Stop loss goes above the swing high of the new candle open. Then you just watch the trade play out and bam, just like that, you have a repeatable winning model. Now I'm gonna go over a bullish example next. Okay, now we have a bullish example. Price taps into the gap, the 15-minute gap, drop down to your lower time frame, wait for a sweep of liquidity. As you can see right here, sweep of liquidity inside the 15-minute gap. You wait for a change in state of delivery. We get the tap into the change in state of delivery inside a gap right here. Once we get the tap into the gap, we enter and we wait for price to expand and go to our profit targets. So to wrap all this up, stop looking for entries before you understand the narrative, before you understand the accumulation, manipulation, and distribution phase. Then you also need to know where price is coming from. That is very, very important. If it's going from IRL to ERL or ERL to IRL, then you have to wait for 10 a.m., wait for a 15-minute gap to form, wait for price to manipulate into it, sweep out liquidity, then you wait for the change in state of delivery, then an IFVG or an FVG, then you enter and you wait for price to go to your profit target. Sequence over speed. You need these steps to form exactly in order for the highest probability setup. If you found this helpful, like, comment, and subscribe, and I will see you guys in the next video. Embassy out.